Hello and welcome to this interview at the FondsForum platform. Today it's a pleasure to have Sabine Schaffer here at this interview. Sabine is co-founder and managing partner of ProInvest Group. Sabine, thanks for having you here in this interview.
Thanks for giving me the chance.
And to start this, I would have the basic question: how did you get into the real estate branch?
Oh, that's a long time ago, by the way, but let me think backwards. So I think the reason why I went from private equity into real estate was pretty much around the GFC, so 2008, whereby at the time private equity was illiquid anyway. Hedge funds had all pulled up their gates as well, so there was no liquidity. And at the investment company that I worked for at the time, the only, I guess, kind of cash flow that we actually saw came out of real estate. And so I thought to myself, if you could combine that kind of running yield with a bit of a private equity like kicker at the end, that would be a very fascinating industry to go into, and that's how I ended up, I guess, in private equity real estate.
And how is then the further connection to APAC?
So APAC was effectively something that came up, I think, in 2011, 2012. As a quick background, the team was already active at the time, across a number of asset classes, but in particular active in operation real estate, and had rolled out, or had brought, I should rather say, the Holiday Inn Express brand, so a select service hotel brand, from US into Europe. Very successful rollout. And then we had seen Australia as being one of the markets where, interesting enough, the brand wasn't present yet. And we thought to ourselves, in one of the markets with the highest labor costs, it is interesting to see that there was not a standardized select service product. And so at the end of the day, it was an idea and two people. And now fast forward 15 years later, you're talking about a company that grew quite significantly. We didn't just roll out Holiday Inn Express brands, but we rolled out other hotel brands as well, via fund structures, SMEs, co-investment vehicles, and the like. And are now, I guess, one of the most prominent, I guess, operating real estate platform across Australasia.
If you are talking about the markets, where do you think, or what is your impression, are good investment chances at the moment?
Sure. There's always, we all know real estate is all about location, right? And that is correct. However, in particular when it comes to operation real estate, I would always say you need to start with the operator first. Why am I saying this? Because at the end of the day, the value of your asset, the yield, is going to be determined by one party only, which is the operator. And if you are not able to incentivize that operator the right way, from an exit perspective, for example, there's going to be a disalignment in terms of interest. So we think that choosing the operator or the operating platform, the partner first, and thereafter together look for the right assets is probably the best approach. At least that's what our experience showed. And I guess that's why we have a quite prominent, as I mentioned, kind of platform on the ground. We're covering development and operation, the operations of the asset on a day-to-day basis, and also the asset management and fund management. So we take care of the structuring and the MIT services and all the stuff that is important. But profoundly, having that development as well as operating expertise in-house is really what sets us apart. And that's something that we've been doing as a team for more than 3 decades now across various jurisdictions, and always in the value-add space. So not just recently, because of the interest rates that I think make value-add investments a bit more attractive in general, but that's something that we've always been doing from day one.
What do you say in terms of regional investment chances? For example, Asia, Australia, Australasia, etc. What is your view in a regional focus?
So, we heard it earlier today as well in the forum. We very much believe that people should focus on kind of areas that they're good in, and in our case, it is very much the operation real estate, living, and hospitality. That's what we've been doing for 3 decades, and we continue doing successfully. Australia, New Zealand, yes, there are obviously other markets in Asia as well that are very attractive, but if you look at the supply-demand dynamics, in particular for Australia, we're talking about by far the largest population growth over the next kind of 10 years. I think it's number 1 among all of the OECD countries. So you still have all of the, I guess, transparency and kind of the legal rights that you used to see in Europe, while combining it with a population growth that's almost like emerging market alike, right? And we think that is very attractive. Now, as I said, Japan is very attractive, Singapore is attractive, other markets are attractive, but being one of the largest platforms in Australasia, having built that up for the last 15 years, we believe we have something that gives us a bit of an edge, and as a result, with the existing infrastructure, the operating platform and the like, so we think that that's something we'd like to harvest on first, and then also go into other markets afterwards with our living product.
If your outlook or your feeling is so good, last question, what do you think you will tell me if we would meet next year here again? What is good or bad next year?
So this is the good thing about what we've been doing. We were very consistent with the messaging, and that has always been across operation real estate and hospitality and living. We do believe strongly that living is a theme that has been here, or has been there 10 years ago, and is not going to go away. I think if anything, it's going to be even more pronounced next year than now, just because, as you all know, there's a bit of a, I guess, imbalance between demand and supply, with very little new supply coming through. And I guess this is also why our expertise when it comes not just to ground development, but also the ability to convert assets, to convert from old offices into living, from old hotels into living, is something that we are planning on, I guess, harvesting on even more, next to potentially as well kind of BTR developments at the right time, because as we all know, for the time being, BTR can be a bit challenged from a cost perspective. But so the messaging next year is not going to be any different. I actually would argue that it's going to be even more pronounced than this year.
Cool. Thanks for your view, so to say, and for your thought, for your feeling.
Of course.
This is really what we can see. And thanks for having this interview with you. Thanks that you came here and we can join this.
Yeah, sure.
And we will see next year what's going on.
Absolutely.
And then we will compare what you said.
Happy to compare notes then. Absolutely.
All right. Thanks for the interview.
Thank you very much. Yeah. Thank you.